Good day, everyone. Welcome to the October Phillip Roundtable. I'm Waylon, the moderator for today's session. Stocks are down, bonds are down. It is a messy year for the financial market. Inflation, recession, and rate hikes. These are some of the most mentioned terms this year. Today, we will focus our discussion on the prospect of Asia economy from the aspects of political tensions, various macro headwinds, and post-COVID recovery. As we know, the World Bank, along with many others institutions, have revised their growth forecast for the year ahead. Mr. Sam, could you give us an overall outlook of the Indonesian economy moving forward?
So specifically on Indonesia, Indonesia is actually quite dependent on China, because China is one of our largest trading partner. It makes up around 25% of our export. However, I think talking specifically about Indonesia, the economy itself is not overly dependent on export. So we still believe that in the current situation, Indonesia can continue to thrive and maybe relatively outperform other economies. So I think what changed in Indonesia in the last few years is that nowadays we have one structural export component, which is stainless steel. So this is an export component that wasn't there, I think, 5 years ago, 10 years ago, during the period of previous crisis. So we'll continue to be bullish on Indonesia. And looking at the latest results, Indonesian corporate continue to report strong earnings results, particularly from the banking sectors, from the consumer sectors, and from the telco sectors. So we don't see a lot of risk from a domestic perspective, where we don't see a lot of risk from import inflation, for example, given that the currency rupee exchange rate is also still quite stable. However, we do believe that from the stock market perspective, it is very difficult to decouple from overall market sentiment. However, I think we do believe that in the event when the Fed finally decided to pause and dollar finally reached its apex, we do believe that some of the sentiments or foreign investor flow can return to emerging market, and Indonesia can still benefit in that regards. Regarding the growth, I think Indonesia in the next 3 months will face some challenges. We do see some slowdown in consumer spending as a result of higher gasoline price. However, we expect the impact from higher inflation will be moderated or normalized next year. So we expect our central bank will increase rates maybe around 75 basis points to 1%. Then they will stop. So we still continue to be optimistic about Indonesian economies. I think another thing that we're quite hopeful on is when China reopens, that will result in higher demand for commodities such as coal and maybe some of the edible vegetable oil such as the palm oil, which should be positive for Indonesian export as well. So yeah, that's from Indonesia.
Thank you, Mr. Sam. Mr. Lai, we would like to hear from you on the Singapore outlook as well.
Yeah, so as we know, Singapore is one of the most open economies in Asia. So basically, that means that the demand from our major trading partners is going to be very important as a driver of the economy. And as you mentioned, our major trading partners like the US, EU, and China are going through a period of weaker growth currently. But we see that this growth in the external markets will kind of bottom for most of these markets going into 2023. The US may see a recession maybe in the first half and then recover further on. The EU, after they get through winter, might be more resilient next year in terms of energy security. And also China, I think, will gradually reopen the economy now that the political transition has taken place. So I think that the external demand for Singapore will kind of like slow down a little bit and then bottom up sometime in 2023. But there are also other drivers of the economy, right? There's also still reopening. Tourism is returning. And the immediate neighborhood, which is ASEAN, is also quite resilient. They also have reopening as a driver of the economy. So in a sense, for Singapore, we think that growth overall in 2023 will be slower than 2022, but still will be, I think, quite a respectable number. I think I'm looking at around 2% growth for 2023.
Thank you, Mr. Lai. As for China, Mr. Lee, what do you think of its economic outlook?
In terms of the outlook, our view on China is it's likely going to be better than our view for China in 2023 is likely going to be better than 2022 because 2022 is so bad to begin with. But although it will be better than 2022, generally we will still view it as it could be a fairly sluggish recovery. Why is it a sluggish recovery? The reason is really because of the property issue. The property issue remains in place, and there are really two ways out of it. The first way is the government embark on a massive stimulus to rescue all the property projects that cannot be completed. But the problem with that is that it will involve a lot of money printing, and it will involve a lot of re-leveraging, meaning the government and the corporates have to borrow a lot of money to do it. And so far, the government has shown that they are quite reluctant to once again borrow a lot of money to rescue a troubled sector. So without huge stimulus to quickly rescue the property sector, then there's only the second option. The second option is to slowly fix the property issue. By slowly, I mean it can take a few years to fully clean up the mess in the property sector. When you take a few years to clean up the mess, and to a certain degree it implies some form of reduction in leverage, usually that slows down the economy significantly, meaning we may see a sluggish recovery meaning a low single digit type of real GDP growth in China versus like 6-7% in the past. So that's the main reason why I think China economy could be sluggish in terms of its recovery. It will be better than this year, but it won't be a huge recovery. It won't be a V-shaped recovery. But the second angle is in terms of reopening. Now, reopening is the part that many people are unsure about. We are not sure about the timing, but most strategists think that it will happen sometime after Chinese New Year, after the winter in China. After winter means sometime after March or during March. If the reopening in China is expected to be gradual and measured, so that will also imply a gradual recovery in the economy. But nonetheless, it is a boost to the economy compared to a very bad 2022. So on one side, the positive is the reopening can help to spur economic activity, but on the other hand, the property sector seems to be going to be a drag on the economic growth. So if I put both of these together, I'm thinking that it will be a very modest recovery in China next year compared to a very bad year in 2022.
That is all of our questions. To wrap up, risks are always there as far as investment is concerned. However, we cannot rule out the long-term potential of the stock market. For Indonesia, the prospect is still bright, and for China, reopening can lift commodities demand. For Singapore, reopening is still in play. Growth is moderating, and for China, 2023 can be a better year than 2022. So control the risk and stay invested.